Hey, nonprofit friends, or I usually say friends, but I often want to say warriors now. It's 2025. We're in the never-ending shortest month of February when we're recording this, but 2025 has been off to an interesting start so far. So thank you all for taking time out of your no doubt chaotic season, busy day to listen to this episode. Today, we're going to be talking about something a little interesting, a bit of a spin, if you will. We're going to be talking about financial transparency, and not in the way that you normally think. We're talking about financial transparency as it relates to your internal teams. So, whether or not you should open up your books and share with, at a minimum, your leadership team, or max, your full internal staff about what's actually happening within your organization from a financial perspective. And not just if you should do that, but if you do choose to do that, how that should be rolled out. So this is actually part of kind of a series that I'm going to be dripping over time. I've had a good secret I've been keeping for quite some time now. Our existing clients have already been exposed to what we're calling the Charity CFO financial blueprint. And what is this? It's a series of 30 different principles that we believe the most successful nonprofit organizations that we've worked with over my 20 plus years have in common to be not only well ran, but sustainable. We're only going to be talking about one of these principles today because admittedly, you could probably do an episode on every single one of these principles and no one has all that kind of time. So we're going to break it up into chunks, but in this particular instance, we're going to be talking about diffusion of responsibilities. How do we get more people involved in the financial management, and when it makes sense, maybe when it doesn't make sense for leaders of nonprofits to, like I said, open up the books and share that. This is something that we talk about a lot with our prospective clients, and this is certainly conversations we're having with our existing clients. But I'm not doing this podcast episode alone. I brought along my colleague, my friend, all of the things, fellow CFO, Pat Fisher. Pat, you are one of our 6 CFOs here at the Charity CFO. You not only run a full team of accountants, but you serve as a CFO for 35 of our clients. And you're having these conversations with the financial blueprint, and having, kind of proactive goal setting with specifically this topic of financial transparency, diffusing responsibilities, and getting more of our clients' team to be engaged in that process. Before we dive in, first and foremost, Pat is really busy this time of year. I mean, people know that about accountants. So I want to say first, thank you for letting me convince you to come on this episode and sharing some of your frontline experience with implementing this kind of diffusion of responsibilities. Pat, thanks for taking some time today.
Absolutely. Love talking about the blueprint. Excited to be talking about diffusing responsibility.
Well, let's dive into the first obvious question. You kind of, I kind of hinted on a little bit earlier that basically every client that comes to us that wants to work with us, they say they want more diffusion of responsibility, meaning they want more people to at least understand the basic financial components of their nonprofit. They probably all have different reasons for it, but I'm curious, Pat, from your perspective, why do you think it's important for nonprofits to share their financial information with their teams?
Gotcha. Yeah, I think the obvious thing that comes to mind is the risk that you have on over reliance of any one or even a group of individuals being the only sources of knowledge for
Mhm.
for certain financial processes or grant related things. So you think about it from a risk perspective first of all, and I like that you mentioned, I think that any organization has some degree of this,
Right.
and those leaders tend to take on a lot of the responsibility. So that diffusing that knowledge from those leaders kind of mitigates a little bit of that risk. And also from a perspective of sharing information with your team and those individuals on the ground doing the work, it fosters trust with your team. And it also gives them a sense of responsibility for kind of the work that they do, the money they're spending,
Mhm.
and the organization as a whole. So I think from a risk standpoint, but also from a trust standpoint, there's benefits in both areas.
Yeah, you bring up a good point. I mean, financial and accounting folks tend to operate very much kind of in a silo. And we're not just talking about gatekeeping the information. We're talking about gatekeeping the processes and the understanding of how to do mission critical things like maybe processing payroll, paying bills, creating invoices so that we make sure money is coming in the door. I mean, I see this happen all the time in multiple instances of some of our newest clients that are left scrambling, trying to figure out, how do I invoice my funder? How do I pay bills? How do I pay my credit card balance off? And so often we see organizations scrambling in that sense. So diffusion of responsibilities to at least get people to understand the components and inner workings of like what the financial team is doing. And I would take it another step further. I had this experience. Some of you all know I used to, work for a nonprofit. I was essentially their CFO and all of the things administrative. And I found myself always having to be the money police, the bad guy, if you will. And because nobody had any financial visibility into, what the budget is, do we have enough money? Like, can we actually spend the money in the budget? Like, yeah, we create the budget, but like, we're always being told to not spend any money under any circumstances. That meant that for every small request, and large request, of course, but especially the small request, people come to me, oh, Tosha, can I sign up for this training course? Can I purchase these supplies? Can I do this? Can I do that? And I know that's how a lot of organizations run, but for me, it felt a bit frustrating because I don't know like what you need. I don't actually know when we sit down and put the budget together what elements within your programming are going to require financial resources, so that I much prefer creating a budget in collaboration with the staff. Let's just use this example, like the program team, that if you need professional development, you identify that proactively, you share that with me so that whenever that time comes around, you already know that that's in the budget. Maybe with your organization, if you're not flush with cash, you just want to double check, like, hey, can I go ahead and purchase this now? But at least people understand that this has kind of already been proactively planned for and approved, barring any like unforeseen extraordinary budget restrictions. But it really takes the CFO out of the position of being the bad guy and, kind of spreads that responsibility across, multiple people. And I think, Pat, too, I mean, you're certainly involved in a lot of this. Do you feel like this shifts people from a reactive, oh my gosh, do we have money, into more of like a proactive mode?
Yeah, absolutely. I think the getting that information to the right people, it allows them to kind of take ownership of those processes. But also, you find that usually when you're diffusing this responsibility, it's going to the individuals have the best knowledge of those
Mm-hmm.
programs or those expenses, so they can monitor those proactively. If you have that knowledge with a key leader like an executive director, and it's not diffused to the individuals on the ground spending the money,
Mm-hmm.
it can tend to be a bit reactive, and when you realize you're overspending or whatever. But when you get that knowledge to the right people, generally they're the ones who actually have the expertise into those and can be those expenses, as an example, and can be
Mm-hmm.
proactive in addressing what they think is potentially overspending or whatever the case may be.
Yeah, and related to that, you had mentioned, in other conversations we've had in the past, where you've seen struggles with nonprofits where if you have different departments kind of hyper focused on one particular area, say you have your fundraising team and they're focused on raising money, then you have like your program team over here, they're kind of humming along and doing the programmatic things, and then you have the financial team, like they're the ones seeing all the expenses actually go out, and no one actually has a full visibility into the entire organization. Like, where have you seen this gone awry, like for the clients that you've worked with, when you don't
Yeah,
have the full picture?
yeah. I think what I love seeing when working with clients is new members of the leadership team or new individuals joining our monthly meetings. So I've worked
Mhm.
with a couple of clients where we have these monthly meetings, and it starts out just me and my team member and the executive director. And eventually, as those we identify where those silos are and who we
Mhm.
need to bring into the conversation, you see more and more information being diffused across the organization. So
Mhm.
I have a couple of clients that I've worked with where they're there are certain individuals running the program, certain
Mhm.
individuals running special events, things like
Yeah.
that. And they have a budget, they know what they're traditionally spending, but they've relied on a combination of a few federal grants and then majority is fundraising.
Mhm.
When you have those conversations in a silo and you don't see that maybe, for example, fundraising isn't meeting their goals, we need to shift the program approach or the event team's approach. maybe spend less dollars.
Mhm.
We might not have what we thought we had in the budget. When you're looping in everyone into those conversations, then that information and you can take actions related to the information that you're seeing.
Yeah.
I think that the more leaders who are in the more directors or leaders who are in charge of certain programmatic areas or development team, et cetera, the more information we can spread to them and they can see the whole picture, then we can
Mhm.
make moves as we need to throughout the year for
Mhm.
our spending or our revenue.
We're going to dive into some examples of what not to do here in a little bit, but kind of as we're having this conversation, it brings me back to something that we have at the Charity CFO. So I'm saying all this and I'm having this conversation, but look, y'all, I try to practice what I preach here. We have this idea of like radical transparency and having the open and honest, brutal conversations. And I myself share a lot of financial information about what the company is doing, where we're struggling, where we're doing well with my entire company on a very regular basis, right? And we have a lot of transparency about that across the board. And I say this, especially in our new hire orientation. I go over kind of our core values and why this is so important. And I have this phrase that I always say that if leadership is not sharing what's going on, especially financially, with their team, especially in times where you're like, oh, things are really good. And then you have to do things that maybe are not seen as good, like forego raises or cut back on certain things or whatever. If you're not being really, really transparent about why you're making decisions or what's happening with the organization, people will make assumptions. And this is what I tell our new hires. Assumptions are almost never in my favor. Okay. And they're almost never like complete and accurate. So I choose to get ahead of those assumptions and let people hear it straight away from me. And that includes, sharing financial information. And I say all of this because I think especially now in light of the climate that the nonprofits are feeling with fears and concerns over, their finances or their continued funding. And frankly, I mean, this has been, I think, a source of anxiety for many people from many industries for several years now. We keep hearing about this, looming recession, and people are worried about layoffs and job cuts and things. And again, I think especially now for nonprofits, that in the absence of sharing some of the financial information, people are just going to sit in a space of chronic anxiety and come up with all these assumptions that if you're a leader of a nonprofit, maybe take my tip and say it's probably never in your favor. So we really practice that a lot at the Charity CFO. And I find that by having those kind of awkward conversations sometimes is reassuring to our team. And I'll give an example. I mean, we're no different than many of our clients. Pat, you already know this, so I'm not sharing anything you don't know. We often tell our team, like, look, this is where we're at financially. And like most of our clients, 80% of our expenses are tied up in our team. So if we're not getting the revenue we need, or if we need to cut back, there's only so much we can cut back before that starts cutting into our people budget, right? And if our people budget is cut into, that inevitably leads to raises, positions, benefits, et cetera. Like, we all don't have to have math degrees to figure out like the math has to math. And when you really boil it down like that and you're pretty transparent about that, I feel like, to your point, what you said, Pat, earlier, it really just builds trust and it helps people understand what direction we're heading in. So anyway, little, sermon for the day. Thank you for coming to my TED Talk. Let's move into some of the examples of like what not to do, maybe. Let's talk about some of the examples, and we're not going to use, people's names here. But let's talk about some nonprofits that have really struggled with their over-reliance on like one financial person. And I'll kick it off, Pat, maybe, because
Yeah.
back when I was working at a nonprofit, like there, I always found, and I heard this a lot from my colleagues too, there was always a lot of tension between fundraising and finance. These departments are notoriously not on the same page. And I've met some stellar fundraising folks that are like on point. They know their budget. They know where they're at all the time on budget. But admittedly, where us financial folks get a little cranky, that when you have the fundraiser saying, hey, where am I at with my budget? How much money have I raised? And you're thinking, I've got like a million accounts to keep track of, and you have like three. How do you not know where you're at? And then when you're not on the same page with the urgency of needing to meet that budget, transparency or an understanding of what the plan is to bring in those dollars. Not just, you got the pledges, but cash flow, when is the money coming in? There's all these conversations that happen between the fundraising and finance department. So when you have an over reliance and you just like default to the financial person, I feel like it lets the fundraising team off the hook a little bit. This has been my experience. Like, why do I have to go? Y'all see me, I'm triggered now. Why do I have to go in front of the board and explain why the fundraising goal is off? I don't know. I'm not part of those stewardship conversations. I don't know if it's temporarily off or if it's a permanent difference because we didn't get a grant we thought we were going to get. Those are the sort of like siloing tension that I personally have experienced. And I certainly have heard so many people share that in the past. I won't mention any names because I see this happen all the time. I couldn't even mention all the names. Pat, what's another common situation that you see for this kind of pitfall?
Yeah, and I've seen actually there are some that example that you just described is an example that I've seen as well, where, like I said, bringing all the team members to the table, I think is extremely important. And so, because that helps the organization to adapt to what we're seeing. Is this a temporary fundraising lag? Is
Right.
it permanent? And do we need to cut our expenses in the moment, etc.? Another
Right.
example I've seen, which is more of an extreme example, is the organization or key members of the organization kind of trying to present their financials to the board in a way that
Mm.
maybe more rosy than it is. And I think it, again, that the board has a fiduciary responsibility to kind of, to dig into that information, and they need to be presented the facts as the situation may be. So
Mhm.
another example of where, that is more of an intentional silo there, but breaking down those barriers can only lead to, to positive outcomes, for whether it's internal with your team so that they know
Mhm.
what they're spending and how it's funded, and so they don't overspend, but also with your board so that they know the true financial state of the organization and the challenges that it's facing, so that they can, live into their fiduciary responsibility for the organization.
Yes, shameless plug for the podcast that dropped the week of February. I think it dropped on the 26th. So I just shared it earlier when this goes live. I know it's going to be several weeks from now, but we talked about that too, like painting rosy pictures for your outside stakeholders or your employees or your board. And then all of a sudden, you're in a crisis mode. And we have this fear of like, if we paint anything but rosy, then maybe we're seen as failure or questioning our competency or whatever it might be. Yeah, I've definitely seen my fair share of that. I think another silo example that I've personally experienced and seen quite often is that the signing of contracts, like we're going to switch a little bit to like government contracts, earned revenue, program fees, whatever you might want to call it, that you get these contracts that when we deliver a certain service, we get a certain, hourly rate. It's not reimbursable like dollar for dollar, but it's utilization, right, of these services, these units, if you will. We have a lot
Mhm.
of clients that have services like this or contracts like this rather. And oftentimes I see that the CEO and the CFO might be the ones either writing the contracts, getting the contracts, or at least understand the details of it, or maybe the program director's involved in the technical narrative of like, hey, this is what we're trying to do. This is our evidence-based, model, et cetera, et cetera. But when it comes down to the nuts and bolts of administering the contracts, so many times I see that the program team doesn't actually have visibility into how they're performing in that utilization. Meaning, let's say it's $100,000 worth of a contract. The program team doesn't have a monitoring system in place to know how many units, maybe they're tracking their hours, but they're not taking it to the next step of like, okay, I did 50 units this month out of the 100 that was expected of me or whatever. There's not this management accountability, like full picture viewpoint that they have to know, hey, if I'm obligated to utilize this much, like, and I fell short, how do I make this up over a period of time? And I see this so often that the finance team, and sometimes in conjunction with the CEO, kind of hold this very close to their chest. I don't necessarily think it's intentional. It's just like, oh, well, why would we do it any other way? But again, it kind of puts the program team in a position where they don't realize what their program is contractually obligated to do. And maybe they're not planning their capacity accordingly. They're not staffing up as much as they should. Whatever it might be, there's this gap of understanding that's going to impact the programs pretty substantially if we underutilize those contracts, or as I like to say, leave money on the table. And then the funders come back and say, well, you didn't use it last year, so we're not going to renew it this year, right? How do we have conversations and share that information with the program team that allows them to understand what they're on the hook for, you know?
Yeah. That absolutely, I think too of kind of your to the larger question of how you're spending down your grants, the those individuals who are boots on the ground doing the work, generally or sometimes may not have insight into, are we spending down this grant too fast, or are we going to utilize this grant to the fullest extent? And so to the extent that you can share that knowledge with those individuals doing the work, then you maximize your grants. You make sure that you're getting every dollar that you can, and you also make sure that you're not running through that money too quickly.
Too quickly. That's another point I didn't think about, but yeah, that happens all the time, right? It's like, oh shoot, we went through it too quickly and we are now kind of out of money because maybe we've already spent that money on something else. But we kind of assumed we were going to get a certain dollar amount every month. And if we utilize that contract in 10 out of the 12 months,
Yeah.
what are we going to do for the last two if we relied on that cash flow to keep coming in? That's a good
And
point.
I have a client that we've worked with who they don't have grant managers, right? Because nonprofits don't always have the funds for a specific person who monitors that kind of thing. But there are a number of large grants, and the individual programmatic leads are familiar enough with the budget of that grant, and also they get the actuals on a monthly basis, so they know how that money is being spent, and they're the best person to know how it's being spent, and to calculate, are we kind of on track? So we provide them that information, and then they can make adjustments to what they're doing depending on where we are in the grant.
Yeah. I kind of, in my mind, I'm always like kind of running parallels between like, how does the for-profit business world work and how does the nonprofit business world work? And I've said this before on the podcast. I think because I'm also in a unique position where I run a for-profit business, but I only work with nonprofit businesses. So I'm always in this weird, like, one foot in each side of the world, I suppose. And what I think about with what we're describing here is the equivalent of like the for-profit world, where if you have department leads, if you have division leaders, think about it. Now, these do not have to be financial people. These are oftentimes just senior leaders, right? That run divisions. They might be engineers. They might be, I don't know, ad executives. I don't know, I'm making something up. I'm trying to think of different industries on the fly like this, right? They could be like in a car dealership. They oversee, the sales, or they oversee the shop. There's all these different division leaders in the nonprofit, or I'm sorry, in the for-profit space. And the same is true in the nonprofit. If you think about it, you've got your director of development, you've got your director of programs, maybe multiple directors of programs. These are truly division leaders. And it's a little wild to think that if you were in the for-profit world and you were a division head, and you had the responsibility of running a whole department, it would never happen that you had zero visibility into the financial performance of your department. Like that just wouldn't happen, because that's like, in addition to all of your other responsibilities, making sure that the department is running in a sustainable way, or in the for-profit world, like a profitable way, is like a non-starter. Like that's just like baseline, right?
Yep.
So it's kind of like, how do we adjust that and apply that to like the nonprofit world, so that we can see, hey, these are all the expenses it truly costs to run my program, so I can maybe write better grants. How do I understand where the money comes from to pay for all of those things? And how do I understand where the fundraising gap is? And just really help a department leader understand, how is my program and is it sustainable? And at different clients that I've worked with, we've had these little goals. Depending on the organization, it doesn't always make sense for everyone. But for a lot of our clients that are more contract-based earned revenue, they have kind of an initial goal. How do I get each one of my programs self-sustainable within their existing contracts? In other words, leaning less and less on unrestricted fundraising, even though we all want more unrestricted fundraising, but the vulnerability of fundraising and the economic like impact of that, how can they be sustainable within their own earned revenue? That was kind of a little goal that one of my clients had. And I think that was smart for them. And now it doesn't make sense for everybody, but having that P&L or that, department report to show like sources of funds, how you're going to use those funds. And we'll talk a little bit more about that later, but yeah, I mean, that's just like a non-starter in the nonprofit world,
Yep.
right?
Yeah, exactly.
So I think the last like obvious issue, which we see all the time, and you kind of hinted on probably why a lot of people end up becoming clients of ours, is the over reliance on one person for, let's just call it less financial understanding, more like processes, right? I mean, we really see this happen when there's unexpected turnover over within a position that has some sort of over reliance. And I think it kind of goes without saying, I'm sure anybody listening has experienced this in the past. But I think some of the warning signs on, asking yourself, am I too reliant on this person? This is something that I practice what I preach. Take an inventory of all of your mission critical processes, functions. I'm talking submit payroll, paying bills, paying down the credit card, processing donor acknowledgement, whatever it might be for your organization, right? Creating invoices, right, for your funders. Periodic reporting on those funders. Like make sure that more than one person has an understanding of those, and each one of those significant functions have a backup person assigned to it. Even if that backup person is a CEO, because maybe you're the only one that knows how to do it, or maybe you don't want to give visibility to payroll and you have a really small team or whatever it might be, like every mission critical function needs to have like a backup person so that an organization can be sustained. I can't tell you how many calls I get from hysterical people like, I don't even know how to submit payroll. I don't know how to pay a bill. It's like you can't give that much power to your bookkeeper. Okay, you cannot,
Yeah.
right? And I would say that's true with any position within a company. I mean, that's kind of our spirit here, that life happens. People have to go out on leave, or people leave companies, right? That just happens. And we kind of embrace that reality here and plan accordingly for it, so that if somebody needs to step away temporarily, they can do that without stressing about, oh my God, how do I, process payroll from the hospital bed?
Mm-hmm.
And y'all might be laughing right now, but I've heard how many accountants have said that. I was in the hospital and I was processing payroll.
Yeah, one of the things I was thinking of, which you exactly kind of hit on, is like those key processes, or when I think about as a CFO who generates financials on a monthly basis, is are we able to generate monthly financials that are accurate, that contain all the information in a timely manner? Are we, because it would be clear if we're not able to do that, that we're over relying on one individual for information. Are we meeting our compliance deadlines for our grants? If we're not, if those are not happening, then that would suggest to me that we're over relying on one particular individual, and we're not, that information is not going to the people who can most efficiently get it up where it needs to be.
Pat, I know a bunch more things we need to go through, but let's switch gears a little bit into an example of a nonprofit doing this really well. Tell us about your favorite case study of, just diffuse responsibility.
Yeah, absolutely. I have a couple of clients who were actually, the interesting thing is we're moving from a position. Maybe they didn't start with diffuse responsibility, but we're currently in the process of moving away from that. And we've had great successes. Like I have a client out west that has a couple of different locations, two locations. They're mostly federally funded, but they have a decent mix of revenue. They have one grant manager who there's always been an over reliance on this individual. And, they didn't necessarily identify it, but when they started working with us, it became clear that this individual was the sole source of knowledge for the coding. The individuals were spending the dollars, the programmatic people, but that would have to then go to this one grant manager to code this information. So it was causing, delays and just over reliance on one individual. It may not even cause delays, but that individual being the sole source of that information is a risk to the organization.
Sure.
So we've been talking about diffused responsibility in the time we've been working together. And so now we've been spreading that knowledge down to those individuals making those purchases. So we've
Mm,
rolled out a couple of different accesses to individuals making purchases so that they can code their own expenses. This
okay.
individual still approves those now, but that is not our goal in the long term. The
Mhm.
exposure to the individuals is the first thing. Secondarily, another thing that they have, which is another kind of initiative about diffuse responsibility for them, is they have two different locations,
Mm,
and location leaders historically have not been privy to what it takes to run their location.
okay.
The expenses or anything like that. So this year, we've actually rolled out some guidelines for them, just giving them a filtered report, very simple, with
Mhm.
what their expenses are. We put
Right.
together a budget for them, and we hope that next year, our goal is that they will have experience looking at that budget on a monthly basis. They're having these conversations. And our hope
Mhm.
is next year, we incorporate them into the budget process because now they're familiar with the expenses that organization their location is incurring. So these are
Yeah.
just kind of examples of making great progress over the course of a short time. And we've got more work to do still,
Yeah.
but we made significant progress in diffusing that knowledge and responsibility and ownership across the organization. And they're really happy with kind of how the process has gone
Progress.
and the new individuals that are involved. So
I love that. We talked a little bit before about like the spectrum, and I've certainly been on both sides of the spectrum. I've worked with organizations where all financial information is gatekept by the finance person, and nobody knows anything about the financial other than the essentially the finance person and the CEO, right? And then it's interesting, like one of my first exposures to this diffused responsibility dream that I'm speaking to is right after I started this practice, and it really kind of inspired a lot of kind of my theory around this. I started working with an organization that kind of had already adopted this idea, and I never thought this was possible. I mean, a dream, but like never thought it was possible. And it was amazing to me with this organization that they had probably a team of close to 100 people. And every single person within that organization, maybe not everyone, but by and large, everyone, it felt like everyone, because everyone was incurring expenses on their own behalf. It could be something simple like taking students out to coffee, it could be mileage, little things, not significant expenses, but every person understood the process for like spending money that was earmarked for them in their position, in their budget. But not only do they understand, how money was spent, but they were able to identify like what account it relates to. And usually, each person had a handful of accounts that were largely applicable to their role, but they knew what department, they knew what like, specific grant, if it was tied to a specific grant, like they knew all of the different elements for like how this money was spent. And I never thought it could be possible, especially with this particular client. They had a lot of AmeriCorps team members that would cycle in and out, like whatever the contract period is. I think it was like 9 months or 12 months or whatever. So we kind of constantly had a revolving door of people. It wasn't, that they've been around for 20 years and they finally figured this out. It was, so much part of their culture and so much part of the training and reinforcement from the top of how they do things and how they understand things that again it was kind of a non-starter. I mean, it was amazing to me to see this in practice. And I'm sure Pat you can agree with this, like there's definitely a correlation between the organizational size and the need for this diffused responsibility. When
yeah.
you get larger, you have an accountant can't possibly know when you have 100 team members, 10 different departments rather, people
Mhm.
spending money here, there, everywhere, like, and they just get random receipts. They're not going to be able to know who purchased this, what program is it for, was it related to a restricted grant? Like, this is not a matter of if you're going to do this, it's a matter of when. So the
Yeah.
sooner you can build a structure that allows like visibility and kind of self-identification of how people are spending money within an organization, the more scalable your organization is going to be. There's just no way, right, Pat? I mean, with our clients
Yeah.
that are larger, they have to move into this model.
Yeah.
Just to be able to function, because just hiring more and more accountants does not solve the mystery of like who the heck spent this money. Right.
Right. Yeah.
It just doesn't make sense.
Yeah. Absolutely.
So let's talk about that. I mean, people are listening. Yeah, Tosha, Pat, that sounds great. That's been kind of on our wish list too. We don't really know how to get there. I always like to give practical steps. Like, I'm not just going to lecture you all, like, this is how it should be, but what are the actual practical steps that people should be taking, to get there? Like, and, we know this because we do it all the time with our clients. So, Pat, what are some of the first steps that people should be doing?
Yeah. I think the first thing that I think of is assessing are all the individuals, are the right people in the meetings? Do they have the knowledge? So thinking about who leads your departments, your the natural structure of your organization. Do we have departments? Do we have programmatic leads? Whatever it is. Those key people who head those teams should be involved in these financial conversations. And if they're not, how can we commit to bringing them in as soon as we can and getting that knowledge to them? So
Okay.
that's what I think of. Is every key individual who leads a department involved in these conversations on a routine basis?
Okay. Identify them first.
Yeah.
If you haven't already, and then
Yes.
bring them into the fold. Okay. What's next?
Another thing I would think of is, inevitably there are different skill sets within everyone's repertoire. So if we do have key leaders that may need some sort of financial know-how or training, invest in that training. So these are not, I mean, this may seem obvious, but a lot of these programmatic individuals may want nothing to do with finance. That's not their skill set, and that's not what their role, but giving them some basic understanding of the finances of the organization. And this doesn't necessarily mean outside training, but it could be just with your CFO or your accountant or your individual, the executive director, whoever it is, identifying these individuals and then kind of giving them a rundown of the finances of the organization and kind of how that works, how we're funded and all those things, I think is important, because it's possible that they may not have that knowledge and they're going to feel like a fish out of water. So getting them comfortable.
Yeah. I think that where a lot of organizations go wrong in this particular place, they're like, oh, let's bring in an accountant and have them explain what a balance sheet and a P&L is. Like, listen, I've tried you all. I've tried so many times of like having these conversations and training. The reality is, as soon as you start talking about accounting, which honestly is why I don't often do that on this podcast, probably wouldn't be super popular.
Yeah.
People's eyes glaze over. You can see them just slowly, like a robot, kind of shutting down, right?
Yeah.
It's really important, I think, first and foremost, like not first and foremost, I think first and foremost, like a basic understanding, like you were saying, Pat, of like just the financial elements of your organization, and not like memorizing in a pop quiz on what a balance sheet is, but, high level, what are the sources of your revenue? What are the ways that you plan on spending it? How do you kind of put together a budget? What's the template? How do you, but taking it a step further, when you start rolling out processes, which we'll talk here in a second, they understand why that's important. Like, why, training them on why it is not reasonable or practical that your accountant is supposed to read your mind and know what every single transaction is. Like, why do we need that source of information? Spoiler, like, it's because if we need to restrict, or we have restricted grants and we need to tag this to a very particular grant, we might know it comes from your program. We obviously know what the expense is. We know the account, but we need that last dimension, and we need the communication and the collaboration with people spending the money so that we can identify that. So it's really some of not just like the basic understanding of finance 101. It's also understanding the process, why the processes ultimately lead into the right kind of reporting and compliance needed for that organization. So,
yeah, absolutely.
Pat, you've mentioned it before, but I think the next natural progression is getting everyone involved in the budget process. This doesn't have to happen in any particular chronological order, but Pat, why is it important to get those people that you kind of identified in step one into the budgeting process? You kind of talked about it a little bit before, but
I think it is important because those leaders then have kind of ownership over their budget, and they know, you spoke to knowing our sources of revenue, knowing what it
Mhm.
costs to run my department, and knowing kind of, what those expenses are that I can control and which are the ones that I can't. So
Yeah.
I have clients on both ends where I have clients who we literally take a department wide, we create department wide templates for budgeting,
Mhm.
filter it out to the team leaders, and they prepare it. They know it well
Mhm.
enough that they're able to do that. And then we have other ones where we're just exposing them to that process. So
Mhm.
we prepare a department budget for them, but next year our goal is that they can involve themselves in that process. So it gives
Yeah.
them ownership, but again, you also find that these, like I said before, these individuals are the ones who know best what those dollars are being spent on. And
Yeah.
as you mentioned, as you grow, the executive director shouldn't and doesn't have the time to know what every expense is on every department's budget. But
Exactly.
the leader of that program or that department does have that knowledge. And so
Exactly.
it helps control expenses if that's something we need to do, but it also gives insight into how we're funded.
Mhm. So I like starting with the budget because that shows the people that are going to be managing the budgets. And I don't mean the finance person, I mean, the diffuse responsibility. It shows them like what type of expenses they plan on spending during the year so that when the expenses start and being incurred, right? Let's just simplify it through credit cards. It allows them to know, oh, I'm spending this, and this goes back to my budget for the supply line item so that when I have a receipt and I need to submit it to the accountant, I know it's for the supply line item. Like you can kind of better map that in your brain, I think, whenever you kind of start with the budget in mind and then you kind of roll out the process, which brings us to our next point of like using a tech stack that allows your staff to have visibility into the expenses and ownership on how to code them or identify them, like which location, like you said earlier, or which department or what grant. And when I say visibility, what I mean by that is creating a way for people to spend money or have visibility into the money while it's happening in real time. And some of our favorite tools that we use, I have no like financial relationship with these people. I don't get a kickback. We really like the way they work. Bill, it's literally called Bill, Bill. This is a great platform for accounts payable. So if you actually have an invoice and they need a check or an ACH or something, you can circulate that and get approved and get the appropriate coding from your program team. Alternatively, the same platform, Bill, has another like credit card platform called Bill Spend and Expense, or also called Divvy. And it's a credit card. And we have this at our firm. Every single employee of mine has a Divvy card so that when they need to buy things like a home office reimbursement or some mileage or whatever, they can submit that by way of this card or this account. And they can upload the receipt and they can identify like, oh, this goes to this budget or this goes to this budget. So if you're having a hard time, like, yeah, but when I spend the money and the invoice comes straight to the CFO and the CFO pays it with a check, how does my team get involved? Maybe think about how to modernize that expense management or vendor payment process to create visibility, approval, and insight and feedback from those that are managing that budget. Pat, you mentioned this before, simple and digestible reports. Like
Yeah.
give folks enough information that they need to make the decisions. Like don't overwhelm them with information. Share something. So somewhere in between nothing and too much that overwhelms them, right? Make it appropriate for their level, for their understanding, maybe even their area of influence. Pat, we talked about this before we started recording that sometimes we just overwhelm them with so much information and they have no control. So they want to start going down a rabbit hole of why their benefits budget is so expensive when they don't have a control over the benefits, right? Like
Yeah.
health insurance renewal is what it is, right? So sometimes we've seen with our clients, like they want just reports that are filtered by their variable expenses that their teams actually have some sort of impact on, right? So
Yeah.
think of those as some of the like the variable or consumable supplies or different sorts of things like that.
Yeah. And I think there's this misconception sometimes when you face hesitancy to share the information with team members that we're saying that to share everything or that
Mm,
and I think this is an important one to say. simple, digestible reports, what they need to do their job. We're not suggesting hide things from them, but we're also not suggesting to, give them the keys to the kingdom and they know
Sure.
everything. It's what would be beneficial for them to do their job. And in the same way, like you referenced tech stack, you can limit their budgets for the Divvy cards. You can limit to what grant they can code that information to.
Right.
So we're not suggesting necessarily to open everything up to everyone,
Right.
but to do it in a strategic way that makes sense for those individuals who would benefit from having that information.
Mhm. I want to come back to that hesitation and wrap up with that. But
Yeah,
before we do,
yeah,
so create the simple, digestible reports. But the very last step in actionable items is just set up some sort of regular cadence where you are sitting down with the relevant staff and going over them. So if you are a leader of a nonprofit, sitting down with each one of those department heads and starting the practice of like reviewing their particular department budgets with them to kind of coach them on what you look for, what information are you looking to see. So have some sort of regular cadence and initiate those conversations as part of your check-ins, whether you're doing that monthly, and if you're not doing that monthly, maybe you should, or maybe quarterly, whatever it might be, just to kind of continue to train them and maybe even you on how to better understand those financial reports and the system of accountability. Pat, so we're running out of time, and I want to leave with, I always like to, address the elephant in the room, the obvious question, the sign, the like, but Tasha, you don't like know how hard this is or what have you. I always like to address that, at least what I think the elephant in the room is. And the before we wrap this up, or anybody that's thinking about bailing a little bit early, I mentioned we have this 30-point principle, the Charity CFO financial blueprint. We are going to include a link down in the show notes to download the full 30 items. So if you want to hear more, not just about this, but all of our other principles, shameless plug for that before y'all bail on me. All right, so let's wrap up with this, the obvious. Overcoming hesitation to do this. Tasha, this all sounds great, but right? Like we hear this all the time. Like, but there's some fears around this and some legitimate fears I want to validate. So let's fire away with those, Pat. First one, my staff won't understand the numbers. You don't understand, Tasha. Like these are not financial people. We're not accountants. They're not good at this. It's overwhelming to them. Blah, 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 blah. Like they won't understand the numbers. Pat, what would your response to that be?
yeah. I would say, for organizations that are embarking on this journey of doing this diffusing responsibility, starting slow, like we're not suggesting that by day two we're going to have a budget, and we're going to talk about these things. We're going to be sharing this knowledge gradually. We're bringing them into the conversation. It's a learning process. We understand that, but we're bringing the right people in and giving them ownership ultimately. But it starts slow, so educating them on the organization and bringing them into the conversation.
Okay. What if my financials look bad and my team will freak out?
Yeah, that's an interesting one, especially in these times with the uncertainty with federal
Mhm.
things like that. I think that at the end of the day, your team should know the challenges that an organization is facing. The leadership
Mhm.
team, the team at large. If there are challenges that we're facing, it's a team effort to work to overcome these challenges. So I think that it fosters transparency with your team, but also you can expect that there may be questions, and I think anyone would know that any organization that's sharing this knowledge is capable of answering these questions. And I
Right.
think the more transparency, the more responsibility everyone feels for making sure
Mhm.
this organization is running the way that it needs to.
Okay. What about, I'm afraid this information or too much information will overwhelm them.
Yeah. I think that goes to what your suggestion is about the simple reports where you can customize this diffuse responsibility as much as you want to. So,
Mhm.
giving the right people the right information and not necessarily maybe more than what they need, I think is key there.
Okay, last one. And then I've had personal experience with this. So if we open up the books to everybody or we show like the organizational wide impact with our senior leadership,
Yeah.
what if there's some disgruntled feelings of inequity? Why does this program get this and this program gets that?
Yeah. Yeah. I'd be interested. What is your experience here? It sounds like you have a great scenario here.
Hypothetically asking for a friend. What I did in those moments was to explain, in this particular case, that particular specific departments got their funding from identified sources, like restricted grants. So kind of educating the team. This department gets more professional development training because it was baked into a grant, right? It's not because we like them better. It's not because we think they maybe need more professional development. It just so happened to be an area of focus for that particular funder, whatever it might be. So really kind of helping people understand that it's not like we start from scratch and we just, decide, oh, this program is going to get this and this program is going to get that. A lot of times it's baked into the contract. So oftentimes with our budgets, we start there, populate all the expenses we know we have to spend because we're contractually obligated to do so. And then where there's other gaps that are not funded by contracts, like we supplement that with unrestricted funding. So it's really just kind of educating your leadership team on like why certain departments are funded the way they are. And in some cases, some departments might be funded largely through philanthropy. Other departments might be funded through like government contracts where the spending of that is much more rigid.
Gotcha.
So this has been, I think, such a relatable conversation. I don't know about you all listening, but I certainly hear this a lot from prospective clients that reach out to us and want to kind of move further down that spectrum. And like I said, it's not a matter of if, it's a matter of when. As your organization grows, this diffuse responsibility is an absolute must for any organization that I've seen successful. And I just want to leave with this last thing. And you said this earlier, Pat, transparency doesn't mean handing over full control, showing every single thing that might create even bigger problems or confusion or overwhelm, right? It means empowering leaders with some level of financial awareness and customizing that based on the information that they need to know. So as a leader, yeah, everything is your responsibility and you have to find ways to handle all of the good, bad, and ugly. What I have learned in my leadership roles is really kind of figuring out what level of information needs to be shared with which position as it's appropriate for that position. Like, I don't need to burden Pat with all of our sales data. He's like, I got enough going on with the existing clients. Like, don't stress me out about that. I got enough problems over here, right? So kind of think about which positions should be looped into that because, sometimes people make that their stress and their problems and kind of thinking through how that is appropriate for your organization. I'm going to leave you all with this. My shameless plug, engage with this content in some way, like, share, subscribe, rate, whatever it might be. But more importantly, go down to the link below, download our full blueprint that includes all 30 principles, follow along with future episodes when we highlight more of these principles. Pat, this has been such a fun conversation. Thank you so much for joining us.
Yeah, absolutely. It's been great. Thanks, Tosha.
Yeah, sure thing. Until next time, we'll see you.